I suppose the biggest question that we need to ask regarding the economic recovery from the pandemic is, firstly, what the impact of the COVID-19 pandemic has had on the South African economy.
Thanks a lot. I think if we just look at how COVID impacted the South African economy over the last year and a half, it has been quite significant. On the labor market, we now have the highest unemployment rate since the quarterly labor force statistics were started to be collected in 2008, 34.6%. And if we look in terms of youth unemployment, it's quite high, particularly if we just look at 15 to 24 years of age. 3 in 4 don't have jobs. So this has placed a lot of pressure in terms of the need to support those households that do not have a way of living because they have lost jobs. And that has a lot of fiscal pressures in terms of what the state can do. It entails significant trade-offs in terms of whether government continue to pay cash transfers to support households, or they use those funds to de-risk a lot of the infrastructure investment where they need investment from the private sector. So it really has impacted the economy quite significantly. And the trade-offs that we have to make at this point in time are quite difficult to make, but they are required in the sense that continuing to support households mean we actually jeopardize the potential of the economy to recover in the medium term and generate jobs. So this is the environment where we are in, and we are still pretty much dealing with the COVID pandemic. We haven't broken the link between infections and economic activity. We haven't vaccinated a significant enough population such that we no longer experience significant death rates and hospitalization because of infections. So as we stand, a fourth wave is expected, and that is going to come with some lockdown of some sort to try and limit the transmission of the virus and hospitalization, and to reduce the number of deaths. And that is going to have a significant impact on the economy.
Before we move on to the next question, I suppose, I read one or two stories this morning saying that a lot of restaurateurs are saying that this has had the lockdown has had a crippling effect on businesses, the crippling impacts on businesses. The alcohol industry said that, they don't know whether they can survive another booze ban when the fourth wave comes. As you said, it's going to come. And I suppose this is what government's sort of weighing up. Do you give economic stimulus to households to survive the pandemic, or do you look to start putting money into businesses, which would then create jobs? It's a bit of weighing, sort of, which is the lesser of two evils, I suppose.
Look, this trade-off is very difficult, but I suppose we don't have a choice but to do both. We have to continue to support households over the short term to continue to make a livelihood, but also we need to make sure that we support businesses to remain afloat, so that when the economy ultimately get out of COVID impact, it has jobs that are businesses that will create jobs for people. There isn't an either or. It's a both, because we need both aspects of the economy. Ultimately, the state's function is to support those that can take care of themselves through the tax system. So to the extent that the state can do that over the short term without jeopardizing fiscal sustainability, the state needs to continue to do it. But also to the extent that we need businesses after COVID that will be available to generate jobs and tax revenues for the state also needs to continue to help. And indeed, as you mentioned, all the COVID-sensitive sectors, essentially within the service industry, and in particular the restaurants, the alcohol, and events, the hospitality sector in general, it has been impacted to a large extent. You can also add to that the airline industries have been impacted to a large extent, and it hasn't fully recovered. It's going to take quite some time. And that's why there is significant need for government to support these industries to make sure that they recover quickly. The tourism sector is one of those that can employ a lot of people without the requirement of high skills. So it's actually one of the most important employment generators which the government needs to actually support. But as a start, I think it would make sense to make vaccines mandatory, because that is the only way to break the link between infections and economic activity, or infections and death. So we have to reach some point where it becomes mandatory for vaccines, because they help save lives and they can open up the economy much quicker. And we've seen it across Europe. Much of the European economies are open. Even also in North America, much of the economy is open because they have vaccinated quite a significant proportion of their population. And it's the right thing to do.
You sort of led into the next question very nicely. So just to give a bit of context, the World Economic Forum reports that countries, like you said, the US, South Korea, European countries like Germany, are on track to return to pre-pandemic economic levels by the end of 2021. Other countries in Europe, like Spain and Iceland, they're on track for mid-2023. South Africa and some South American countries, the end of 2024. What impacts will this have on what impacts will this protracted recovery have on South Africa?
Look, the difference that you highlighted in terms of the return to pre-COVID-19 level of the economy across the US, South Korea, and Germany, you could say, a large part of Europe and the global South, essentially all the developing economies, is because of the difference in the vaccinations. The global North or the West has been able to vaccinate large amounts of their population quickly enough, and in some cases they are giving a third dose or even a fourth dose in some countries, and that helps to open up much of the economy that has been closed because of COVID. In the global South, where we have countries such as South Africa, we have vaccinated a smaller proportion of the population, and as a result, we still have a very strong link between infections and economic activity, or infections and severe sickness and death. So to extent that we haven't broken this link, we will continue to have some form of disruptions in economic activity as and when the waves of COVID continue. And by the looks of things from health professionals, there is a view that says we will experience this COVID for quite some time to come. It may well turn out to be a seasonal, illness that we have to get, constant vaccination or booster to the vaccinations. And for South Africa, yes, we expect the economy to recover back to 2019 levels in 2023 and beyond. And that means the unemployment rate will continue to be high, and we expect it to increase to some 37% in 2023 before it starts to come down, especially if we don't see the economic reforms that are being implemented being fast-tracked. And that just means the people that will be coming into the labor force will be so much that the economy can't absorb all of them, and we are going to see a significant rise in the unemployment rate. And with that comes a significant, pressure for the state to continue to provide support to the distressed households. So it's significant implication of this difference in vaccinations and difference in economic recovery on the South African economy. And it will have potentially on the social side the potential for tensions to rise. We saw the July riots, and that in part also is because there is a lot of suffering, a lot of unemployed people that have nothing to lose.
So what impact will this have on consumers? Where will they feel it the most?
On the consumer sector, if you look at it, because of the significant social security that we already have as a country, which is about 3% of GDP that we spend on social security. You can count child support grant, old age grant in there. It's quite significant. The global average, just to give context, is about 0.9% of GDP. So we are already providing a significant, cushion to households, and that is quite a lot of money, roughly about 300 billion that the state continues to pay annually to households, which will continue to support the retail sector, because you can just imagine low-income households spending is largely concentrated in food and basic consumer goods. So that will continue to sustain the retail sector. Where you are going to have a significant impact is on the durable goods, the big ticket items, and in the property market. That's where you will continue to see a lot of pressure, because that requires people to earn an income to be able to afford those kind of products.
I mean, the next big issue that we have to talk about, besides the vaccination issue in the Europe and in the US, which is different to Africa, is the fact that the US and the UK gave a lot of economic stimulus to businesses to help them overcome the effects of COVID. And, there were some government grants to South African businesses, but to the larger extent, South African businesses were left to their own devices, sort of try and navigate this the best way that you can. Um, is this an issue is that a big issue or a big difference that we sort of missed?
Look, it is a big issue, but I think there have been quite a significant response that is positive from government. You would remember when the pandemic hit, the South African Reserve Bank reduced capital requirements for banks to actually be able to on-lend or to restructure loans to their customers, which to a large extent, are South African businesses, and also to households in terms of the mortgage bonds and some of the credit agreements which they have, and that has helped to keep businesses afloat. But also, you would also remember that there was a credit guarantee scheme that was created, by the National Treasury in conjunction with the South African Reserve Bank and commercial banks, that tried to make sure that banks can help their customers, particularly businesses, to be able to put maybe a debt standstill or interest, freeze in terms of repayments, and that helped a lot of corporates. But though that was not as successful as it was expected, because just about 20 billion of that potential 200 billion credit guarantee scheme was used. But from a fiscus point of view, it just shows the limitations that our fiscus has in terms of assisting businesses and households. We have increased our debt quite significantly, and we continue to pay significant interest costs on that debt, which means the available funds that can be used to help businesses and households continue to decline. And that is why National Treasury is embarking on a fiscal sustainability framework, where it says it wants to reduce the amount of debt over the next 3 years to make sure that it's sustainable over the long term. And that is going to relieve a lot of funds from the savings out of the lower interest costs that we will pay once we reduce the debt, and those funds can be used for investment in the economy that can generate jobs.
So, I mean, we spoke about 2024 and our return between 2023 and 2024. Is there a way to fast track this recovery? And if there is, what economic levers should we be focusing on to achieve this?
Look, the South African economy has been in decline before the pandemic, and part of the decline has been the lack of confidence in the South African economy because of the mismanagement of the economy that we have had over the last decade. In terms of policy, it has been quite confused and difficult to actually digest and to get and understand what is the direction from the government. Since 2018, we have had a good direction in terms of the economic recovery and reconstruction plan that the president announced, which has, as part of its process, a focus on infrastructure investment. We created quite a lot of institutional capability You have what is called Operation Vulindlela, that is meant to remove all the bottlenecks in terms of implementation, and we've already seen some results that are coming out of that process. You can think about in the energy sector, the 100 megawatts that is now allowed for private companies to generate in terms of electricity without the need for licensing. That's a positive one. You can think about Transnet, for instance, Transnet Port Authority as well. It's out to look for 100 billion from private sector companies as third-party players in railway, in ports, which is what the president highlighted as for infrastructure investment to actually ramp up. We have to involve the private sector, which has capital, which has technical know-how, and we see that is happening. And it has been slow, but there is now solid evidence that economic reforms are taking place. If these are ramped up, we are likely to see economic growth improve over the next 3 years. But at this point in time, we have to contend with the fact that these economic reforms are not quick fixes, so they are not going to generate economic growth over the short term, but over the medium to long term, they will prove to be good economic reforms that will generate growth.
You mentioned economic policy, and I'm not exactly a born free, but I do remember in 1992, 1994. I mean, I distinctly remember we had to basically rebuild our economy from the ground up. And we had a very good finance minister at the time. Some people say he was great, some people don't say he wasn't great. But Trevor Manuel had a very robust economic policy that largely survived the first round of load shedding in 2008, which you have in the past described as the worst that we have ever seen. And it also survived the credit crunch that the rest of the world sort of, struggled with. And Manuel's, economic policy extended into 2010, where we saw a lot of, okay, fine, we were boosted also by the FIFA World Cup, where we had a lot of infrastructure rebuild programs. But this economic policy lasted for a very long time. Would a similar policy have benefited the South African economy during the pandemic?
I think there are a couple of factors that we also need to take into account. The mid-2000s coincided with a super commodity cycle boom. And South Africa, being still a very important country in terms of the mining sector, benefited a lot out of that. We also benefited significantly from a very robust global economic environment, which was also accompanied by declining inflation across many countries, which also meant that we were going to see a significant reduction in interest rates the world over. And that provided a conducive environment for South Africa to grow. But also something that you mentioned that is positive, we had a lot more policy clarity as far as what is our fiscal stance, what is our monetary policy stance, and what are the priorities. Come 2007, 2008, with a change in administration, we saw a significant shift in terms of policy inclination, which was not beneficial for building business confidence and encouraging private sector investment. And we saw increasingly private sector looking for growth opportunities outside of the country than inside of the country because of that decline in confidence. And that has meant that the economy struggled. Once the 2010 was done with the infrastructure build, from around 2013, we saw economic growth start to moderate. We saw significant contraction in public sector investment because we had to consolidate our fiscals for it to remain sustainable. So the easiest government spending programs to cut was public investment. And that laid the foundation for low economic growth in the country for the many years that had to come until the new administration in 2018. Now that is now reversing. We now have some policy clarity in terms of priorities, infrastructure, that's one, fiscal prudence and fiscal sustainability, that's two. And that has helped to reverse the decline in business confidence that we saw, but it's yet to yield tangible results that we can actually see in the numbers. But so far, it also coincided with a somewhat cyclical recovery in the commodity prices, which has helped so far in terms of generating the extra tax revenues which the state did not budget for, which were used to a large extent to cushion the economy from the ravages of COVID. Had it not been for that commodity, cyclical boom, would have been in a far deeper crisis than where we are today. But as to the sustainability going forward, it's not assured, because expectations are for commodity prices to moderate, and that is going to coincide with the global environment that is also going to moderate, which is not going to be quite conducive for South Africa, which is why we need to push ahead with the infrastructure investment plan that are going to underpin a robust and sustainable economic growth. And I think it's quite possible. We are seeing the results slowly, and we hope we're going to see more in the years to come.
Policy clarity and economic policy has a lot to play in the political world. We know that we've got elections coming up on the 2nd of November, and a lot of opposition parties have said if ever there was a time to go out and vote, this is the vote to go and have. I suppose this is because we're starting to see some dissent towards the ANC with regards to economic policy and the recovery from the pandemic. So I suppose the final question that I have for you to end off is, will the recovery from the pandemic be at a Rubicon moment for the ANC, given that we've got elections coming up now and the presidential elections coming up in 2024?
Look, I think this is quite a difficult question to answer because it has many aspects to it. If the economy generates jobs, I think the credit will go to the ruling party, given that it drives a lot of the economic policy in the country. So one can expect continued support for it. As to when that happens, it's everybody's case, but potentially not at this election. Because if we look relative to where we're coming from the last elections, you could say things are worse because of the pandemic, but there have been quite a significant response to cushion households. The other aspect that we have to consider is, since 1994, we have seen the ruling party continue to win, but its majority has declined over time, similar to what we see in other countries. Over time, liberation movements or liberation parties continue to decline in terms of their support base. But at this point in time, I'm not convinced that we are going to see significant shifts in terms of voter attitudes. So I would not expect something that is going to be a Rubicon moment. We will perhaps over the next couple of years, that might well be, but if the economy recovers, it might actually reverse, and they may actually reap the benefits of good policy making.
Isaah, thank you very much for joining us as always, and we look forward to talking to you again sometime soon.
Thank you for the discussion.